Marshall Gittler, Head of Investment Research here at FXPRIMUS, bringing you my week in focus for the week beginning August 1st. Well, the string of do-nothing central bank meetings is set to come to an end for sure this week, with both the Reserve Bank of Australia and the Bank of England expected to cut rates. The other big event of the week is, as usual for the first week of the month, the U.S. non-farm payrolls, which are expected to fall back to a more normal level after June's abnormally high figure. We also get the final PMIs for July, including today's announcement of the PMIs for China, which are out already. The big question in the market is what the Bank of England is planning to do. There's no question that they're going to do something after a string of weak post-Brexit data. The market's pricing in a 100% chance of a cut, with the vast majority of economists forecasting a 25 basis point cut to 0.25%, and further cuts coming later. There's more debate about the asset purchase program. While most economists see that remaining unchanged at £375 billion, some are forecasting an increase up to $525. Now, a cut in rates and no change in the asset purchase program is now fully priced in. It'll take more than that to cause sterling to weaken further. The U.S. non-farm payrolls are forecast to be 175,000, almost exactly back at the 6-month moving average, which is 172,000. So this is in line with the forecast for Wednesday's ADP report as well, which is for 170,000. Now, the non-farm payrolls figure would be a boost from the April to June average of 147,000 and would therefore represent a strengthening of the labor market, in line with the FOMC's recent statement. This could cause a rebound in Fed expectations and strengthen the dollar somewhat, in my opinion. Outside of these events, the main point will be the final PMIs for June today, including the China PMIs, which, as I mentioned, are already out. The official China PMI slipped just below 50, but the Caixin PMI rose much more than expected to be over 50 again, which is encouraging for commodities and commodity currencies. The ISM Manufacturing Index is likely to be the most important one, but I'll discuss that and tomorrow's Reserve Bank of Australia meeting in my afternoon comment. Now, the final PMIs usually aren't a big thing for the market, but any revision to the final UK manufacturing PMI today or service PMI, sector PMI on Wednesday will be closely watched. In addition, the UK construction PMI comes out on Tuesday, tomorrow. That's expected to collapse to 44 from an already weak 46 the previous month. That may add to the gloom over sterling. Now, outside of the data, the markets will be watching the oil price this week. Oil rebounded on Friday and this morning on the weaker dollar, but with Saudi Arabia cutting its export price to Asia and OPEC production rising, I personally doubt the oil rally has legs. This is Marshall Gittler, Head of Investment Research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.